Hi, it's Nero here from Investment Rise, and today I want to talk about what happened to our property markets in the last 12 months and what are some of the biggest factors to consider for 2023, especially if you're trying to work out when is the best time to buy an investment property for yourself. So let's begin by looking at the data for the last 12 months. So here we have CoreLogic RP Data Daily Home Value Index, the monthly values as at the 31st of December 2022. Now again, if we look at our capital cities, which is essentially what this data focuses on, and if we look at Sydney, for all dwellings in 2022, prices dropped 12.1%. Now again, this is across all of Sydney. There are definitely certain parts of Sydney where prices dropped a lot more than 12%, but there are also certain pockets where property prices hardly fell and even rose slightly. Okay, so again, this is just general data. Always remember that when you're investing in property, you're not investing in a city necessarily, you're investing in individual suburbs. So this data is just to give us an overall indication. Okay, so Sydney, 12.1% drop. Melbourne, prices dropped in 2022 by 8% for the year. So initially when you look at that, it seems like, well, Sydney is actually worse off than Melbourne, okay? And some of the headlines, that's what they'll have you believe. But then when you look at how much property prices rose before prices started to drop, so I'm talking from the end of the pandemic in 2020, you'll see that Sydney prices rose about 30% okay? So someone who bought property in late 2020 or early 2021, they probably saw prices rise 30% on average, drop back 12, they're still well ahead, okay? But that's not the case in Melbourne, unfortunately, because Melbourne prices didn't rise as much during the pandemic. And even though on looking at these figures, it seems like, Melbourne did better than Sydney, actually, that's not the case. Let me share what CoreLogic's figures show about what's happening in Melbourne. Property prices slide in biggest fall since GFC. Now, as I go back to the figures, which I will in a moment, you'll see that these headlines are really Sydney and Melbourne focused, okay? They're really designed to get people to click, to read, and to, I guess, evoke fear or play on people's fears, all right? Because that's not the case nationwide, as you're about to see, but let's just look at Melbourne here. Melbourne will wipe out all of its pandemic gains by February, the only capital city to do so, as rising borrowing costs dent the market, CoreLogic's latest figures show. Overall, capital city prices fell 5.3% last year, the biggest calendar year fall since the 2008 financial crisis. Now we're talking 5% here, right, nationwide. But excluding Melbourne, prices remain well above where they were before the pandemic. So it's actually Melbourne that has suffered the most, relatively speaking, because even though prices have dropped only 8.6%, which is low compared to Sydney, it's actually quite high compared to how much prices rose. And essentially people in Melbourne, if these figures are to be believed, their prices are going to go back to where they were before the pandemic, and it's the only capital city to do so. So that's Melbourne. Let's go back and look at the figures for the other capital cities from CoreLogic. Brisbane, including the Gold Coast, all dwellings, prices fell a massive 0.7% for the year in 2022. Okay, so again, you can see how different the Brisbane figures are compared to Melbourne and Sydney. And look, there are certain pockets of Brisbane where prices have continued to rise and are set to rise even further in 2023. So again, this is just general data, but you can see that these scary headlines about the biggest price fall since the GFC and all of that, it's very heavily Sydney and Melbourne focused, all right? So Brisbane, 0.7% fall. Adelaide rose a staggering 10.1% throughout 2022. Now, this should immediately create some questions for you, because the major rhetoric that we're seeing in the mainstream media is that as interest rates rise, prices fall, okay? And sure, that has been the case in Sydney and definitely Melbourne, but there obviously are other factors in play, because if interest rates rises were the only thing impacting on property prices, then the entire country would need to fall, right? And we can see that Brisbane essentially just stayed flat for the year, and Adelaide had double-digit growth for the 12 months, okay, where we had multiple interest rate rises. So then interest rate rises obviously are not the only factor that determines what happens to property price movement. And I think that's something that you really need to keep in mind going into 2023. Let's have a look at Perth now. Perth for 2022, prices rose 3.6%. Again, defying this logic that people are putting out there, this rhetoric that interest rates are the key factor that drive property prices. The data is clearly showing that is not the case. And then we come to Darwin, and again for 2022, prices rose 4.3%. Canberra, they dropped 3.3%, and Hobart, they dropped 6.9%. So that's what happened to property prices in 2022. And hopefully you can see then that, we don't have one property market, right? I've just gone through the capital cities and at a very high level, and you can see that how some areas have rose in value even though interest rates rose, and others fell. So the question though is, well, what's going to happen in 2023, all right? And yes, interest rates are going to play a part. So let's have a look at what's going to happen to interest rate movements in 2023 and into 2024 according to 34 of Australia's top banking and finance experts. So here we have the cash rate forecasts from the Australian Financial Review, who surveyed 34 of our top people involved in banking, finance, etc. Okay, and what you can see here is something quite surprising. So let's have a look at what Shane Oliver from AMP, the first cab off the rank, says. He says that interest rates should stay the same at 3.1% for the first half of this year, then drop in the second half of this year, and then drop again next year. Others like, let's say, Peter Monkton from the Bank of Queensland, he's expecting interest rates to rise in the first half of this year, stay consistent in the second half, and then drop next year, okay? And if we go through each of these individuals, what you'll see is, except for a couple of outliers, most of these experts are expecting either interest rates to stay the same, maybe one or two interest rate rises in the first half of this year, and then rates to drop potentially as early as the second half of 2023, or definitely in 2024. So what does that then tell you as someone who's thinking about investing in property? It certainly seems that we're getting close, if we're not already, at the end of this interest rate hiking cycle. And then with interest rates expected to fall pretty soon afterwards, what do you think that's going to do to confidence in the property market? I think you're going to start to see confidence start to increase. You're going to start to see buying activity start to increase. And with the fact that we have a significant undersupply at the moment in many areas across the country, I think you're going to start to see prices rise sooner than most people expect. In fact, here's a chart from SQM Research, Louis Christopher, where he goes through a number of different scenarios, but let's look at scenario 1, which is his base case, okay? And what he's saying here is that interest rates peak at no higher than 4%. That's one of his conditions. Now, what you saw from the previous chart of 34 experts, I think there was only one, which is from Goldman Sachs, who expects rates to rise above 4%. Everyone else is expecting interest rates to top out somewhere in the 3% range, okay? So therefore, we're talking interest rates staying at below 4%, then inflation peaking at 8% and falling back to 5%, according to Mr. Christopher's base case research, and unemployment stays below 5%, all of which I think is very, very likely. Now, based on his research, he's saying if these conditions hold, look at what he expects to happen to property prices, okay? Perth will rise, Brisbane will rise, Darwin may fall or may stay flat, Melbourne will rise, but Sydney is expected to rise significantly. Adelaide will keep rising. There are many people in Adelaide who will say this is just conservative and property prices will rise a lot more than that. Hobart to rise, Canberra to rise. In fact, except for Darwin, all capital cities are expected to rise, and I think many regional markets will rise, and everything that he's saying backs up my own research findings as well. And then finally, let's have a look at this article. Sydney Real Estate, 6 reasons why house prices could rise again in 2023. The article goes on to say, there were 236,000 listings for sale across the country as of October, roughly the same level as March 2010, when the population was 4 million less than current levels. So when you consider the fact that interest rates are getting close to their peak, we have some massive undersupply issues as you just saw. We have migration increasing significantly. It certainly seems like demand is going to be higher than supply. And that's why I expect that property prices are going to start rising at some point in 2023. Now, no one can give you the exact month when property prices will rise, but the message for you, therefore, is that if you are someone who can afford to buy investment property, even if you allow for a couple of interest rate rises, okay? And if that's your personal situation, then it certainly looks like the best buying window is going to be in these first 6 months of 2023, when there is still some uncertainty. And I think the people who buy well in good locations where there's good capital growth potential, they're the people who are going to be very happy with their purchases, while people who sort of put things off will probably look back and say, I wish I'd taken advantage of the opportunities that were there in the first half of 2023, and they may regret not taking action. Hi, it's Nero here again, and thanks so much for watching. If you like what you saw and you're looking for a proven recipe, a blueprint on how to build a property portfolio that gives you passive income, then click the link below this video and get a copy of my book, Wake Up Wealthier, How to Build a Property Portfolio that pays you an income each and every month. Okay, when you click the link and you download your book, you can get both the digital version and the audio version in case you don't like reading. All right, so I used to sell this book for $49, but right now I'm making it totally free. Why? Because I want more people to get this information, and I know that a segment of you will then like what you see in the book and choose to reach out to find out more about our services. But even if you don't, if you're serious about building a property portfolio that pays your passive income, then you really want to get my book, Wake Up Wealthier. It contains the secrets that I have fine-tuned over the last 19 years. It's totally free for a limited time. Click the link below.